Hey guys, Michael here with another video. Not going to be going over anything too formal tonight, but I just want to share something that I've been working on over the weekend. A couple of weeks ago, I had this video, everything you need to know about first home deposits, and it was me talking about my property goals in the next couple of years. And I also mentioned that I wanted to save up a 20% deposit so I avoid getting lender's mortgage insurance. And that I got a comment from VR here, and they said, "Lol, are trying to save to a 20% deposit." Ha ha ha. So this just made me think. It made me question. Yeah, maybe is there potential in getting into the property market as soon as you can, copying the mortgage insurance in the short term? Will there be a long-term benefit? So the accountant in me decided to make a spreadsheet, and this is what I came up with. So we just have a bunch of input cells over here in the gray, and you just have to put in the figures that relate to you, and then on the right over here, it's going to come out and say what is the better option. So I said in my video I was going to be aiming for about a $500,000 home. Keep in mind that might be different by the time I actually do go to buy one. And then the next cell that you have to put in is how much you currently have saved. So just for round figures sake, I'm going to say that $50,000. Next is the property appreciation. How much do I think the property market is going to appreciate per year in a percentage? So I'm going to be super conservative and just say 2%. Next cell is the mortgage interest rate. So again, I'm going to be really conservative here and say that it's 3.5%. At the moment, there's lots of people getting definitely below 3s, and there's definitely some below 2s, I think, that I've seen. So, but I'm just going to be super conservative and say a 3.5%. Next is the mortgage length. I'm just going to say 30 years. That's pretty common. And the next cell is an interesting one. It's how many years do I think it's going to take me to save up to a 20% deposit? So in this example, it would be a $100,000 deposit. And I'm just going to say it's going to take me 3 years. And then last, we have just like how long in the future do we want to be comparing? Keeping in mind this only goes up to 30 years because that's the length of a mortgage. I've just decided let's just compare up to there. So the average person lives in a property for about 7 to 10 years. So I'm just going to say 10. And my calculator has split out that in 10 years time, it would be a better option to get into the property market and cop lender's mortgage insurance. And so there we go. Then let's just try playing with these numbers. So if we said 30, again, the better option would be to just get lender's mortgage insurance. If we compare on a much shorter time frame, as I thought, it would say the better option would be to wait up and save. Let's just get creative. What about if we had a high interest rate in 20 years' time? Okay, mortgage insurance. What about if the property market doesn't appreciate as much? And lender's mortgage insurance is. So, it's just a fun little calculator you can just use that I've used to challenge my thinking. And so I've left a link to this in the comment section, in the description below. So if you want to grab a copy, just click on the link down there.